All right, guys and gals, it's about that time of day again here, folks. Welcome back. Welcome back. It is already the 19th day of May 2014. I can smell the grill getting fired up for Memorial Day weekend. It's only a few days away here, the unofficial start of the summertime. Welcome back, boys and girls. Did you have a good weekend? Remember, last time we spoke, I reminded you our most valuable commodity is time. So I hope you spent some time with some family and friends. Maybe you spent some time digging through my material on my website over the weekend, learning more about the waves and the two steps and the reversals and everything in between. I got an exciting newsletter in store for you guys and gals here this evening. It's Monday, the 19th of May, and we got a big, important topic here to talk about today, and that is, first of all, we'll talk about what happened today. We had gold trading sideways, crude pushed higher, Russell pushed higher. But I've got some really important clues, though, that I want to talk to you about that there might be a little bit more than meets the eye for what actually happened today. A little bit sluggish market today because it was rebalancing Monday. We're going to talk about what rebalancing Monday is in just a few seconds. Once we review what happened today, then I want to go take a look at the news for tomorrow. We'll get ready for tomorrow. We get another day without a lot of news in the U.S., but that doesn't mean we're not going to have some fireworks, so be ready. And then last but not least, you know me, I'm going to make you guys wait for the good stuff. At the end of the newsletter tonight, we're going to roll up our sleeves, we're going to grab some charts, and get ready for Tuesday's trading opportunities. So we'll talk about what happened today, and then we'll roll up our sleeves, and we'll get ready for tomorrow. We have been on fire the past few weeks here, looking at winning trade after winning trade. If you go back and watch last Thursday night's newsletter, we nailed the buys on gold at the lows of the wedge. I believe it was a buy and a sell from last night's newsletter from last Thursday. Crude oil pushed higher, Russell pushed higher. We're doing a great job right now anticipating, right? We don't use the word predict. And it seems like everybody is profiting right along with us, getting a lot of great feedback from members and non-members. And don't forget, every single day, I open up my live trade room at 8 a.m., and we take all this information from tonight, and we put it to work in the markets real time. Before we jump in today's newsletter, I do want to remind you, get yourself over here to sidewaysmarkets.com. What are you waiting for? If you're watching this video on anything else besides our blog, if you're watching this video right now on our YouTube page, there is a link below that YouTube video that will take you right to sidewaysmarkets.com. Now, why would you like to get over there? Well, because over here on sidewaysmarkets.com, besides having one of the world's largest database of trading videos, right? I'll prove it to you. Take a look yourself. We also have all of today's charts, all of today's commentary. Everything I'm going to talk about today is available to download for yourself. How nice is that, right? Now, why do I do that? The reason why you can click the link below the video and click that link that says click here to download today's newsletter, charts, and commentary, there's a reason why I do that. It's not for my health. It's so that you, as you're learning with me, can download the charts and then pause the video. So go ahead and pause the video, follow that link, download those charts, and then put them up on your second monitor, all right, or split screen, and you can have the charts and the commentary to go right along with the video. That way, as I'm going through the charts, you can do the same thing. Don't just sit there, pause the video, and then follow that link and download that set of charts and commentary so you have them for tonight's newsletter and you've got them ready for tomorrow. All right? That's what I recommend. That's going to give you the most bang for the buck. And then while I've got your attention, don't forget, I have a special invitation. I got a free pass for you and anybody else who wants to join, right? Bring a friend to come out and join me tomorrow afternoon in my live trade room. Guys, this is a very unique experience. If you've never been in my trade room and seen what we're all about yet, what are you waiting for? You're already loving my newsletter. What are you waiting for? Come out and see me in the trade room, and I'll show you all of what we do in real time tomorrow afternoon. And then don't forget, guys, you're never going to miss another newsletter when you register for our newsletter mailing list. So give me your name and your email address. I promise you will not be disappointed. And I'm going to send you a heads up every evening when I publish my nightly newsletter. All right? That way you never miss a single thing again. So join our free pass to our trade room, join the newsletter list, and make sure you get over to sidewaysmarkets.com and click on that link right below the video to download those charts. All righty. Enough chit-chat here, JJ. Time is money. Let's make some of it right now. Let's first start out with what happened today on the old crude oil futures. One of our favorite markets, but this market has definitely been one that's leaving a little bit of concern here as far as higher prices. Now, it should be no question at all, right? The soap opera in Ukraine, the shenanigans from Putin, right? He kept his shirt on over the weekend, which is good. I think that's probably why crude wasn't at 107. That was a bad crude joke. But we can see very clearly here on this VIP chart, we are bullish in the long term, right? You can see this channel that I've got drawn in here on the crude. Very, very bullish in the long term here. Doesn't help us too much as far as what short-term trading opportunities we're going to see tomorrow, but this definitely tells us to expect more of this in the future. So the soap opera in Ukraine, and then dare I say, the summer driving season. Oh my goodness, say it ain't so, right? We expect to see a lot of demand for crude oil when the warm weather shows up. People take the kids camping, Disneyland, vacations to see grandma, you name it. So we know that there are two fundamental reasons why this price should keep pushing higher. Now, fundamentals, or as we call them, funnymentals, right? We tend to be more of a technical trader. So we know we got some fundamental clues that crude should definitely be catching bids right now. There should be some demand on crude. But look at the technicals. The technicals tell us that this morning we gapped all the way up and went right to that prior week high, right? That's the high from Friday, Thursday, Wednesday. That's last Wednesday's high. And if you remember, we got that bullish crude report last Wednesday. Couldn't get above the 102.65. Now we've smashed that number, and now we've gone all the way above 103. So very bullish fundamentally, but now we're also seeing the fact that we gapped up above last week's high and managed just by the skin of our teeth here. Look at this. The prior high of days at 102.65. What's my closing print today? Same thing, right? Is that a coincidence? Yeah, right. That's a pretty big coincidence if that's a coincidence. So we know right now those buyers, they sure got their way with this thing in the overnight session. Now what we're seeing here is we're seeing this big bull channel. We had only 60 ticks of range in the U.S. session today. Now I want you to think about what that means. That means this big gap overnight happened in the London trading session, either London or Asia. It wasn't in the U.S., right? The U.S. session for crude is from 9 a.m. until 2:30 p.m. Eastern Standard Time. Okay, so when we look at this, we see, wow, more of the same thing. Big moves happening out of Europe and Asia. That, of course, is resulting then in smaller moves here in the U.S. session. Now, here's what we're going to do. We're going to continue to play the game the way the game is being played right now. As traders, we can't change the game. We have been spoiled here in the U.S. over the past 10, 15 years because we are used to getting the big moves in the U.S. daytime session. Now, we're coming in at 9 o'clock and we're seeing a bunch of Z's, right? We're seeing these guys catching Z's. They're counting sheep. There's a sleep at 9 o'clock. Well, we know what's going on. The move is happening overnight. So here's the reality. The reality is we cannot trade crude the same way we used to, at least not until it returns back to the way it was before. The good old days. All right, snap out of it, right? The good old days are gone. We got to play this game the way it's going to be played right now. And that means if we continue to see these big moves in the overnight session, and of course, I'm in the U.S., I'm referring to overnight being Asia and London. If you're in London, you're in a great spot right now. All right? You're in a great spot right now. Talked to my brother over the weekend, who's a director at a Forex bank in London, and he was laughing at us here in the U.S., saying that he was having all the fun. So if you're here for the London session, trade that because it's got some big moves you're seeing. What's London? London is going to be 3 a.m., in my opinion, to 7 a.m. Then you've got U.S., that's going to be 9 a.m. to 2:30 p.m. All right, then Asia will kick in at about 6 o'clock. So London and the U.S., that's where the big baton gets passed. We're seeing big moves up and then range-bound markets in the U.S. If you're trading London right now, you've got to be ready for those big moves. If you're trading in the U.S., here's the important stuff. If you see a big move that happened overnight, what are you looking for in the U.S. session? Range bound, right? Buy lows, sell highs. You got to expect it. You got to expect it. That's the type of personality we're getting right now, and until it changes, we're going to play the game the way the game wants to be played. Now, remember, tomorrow morning at 8 a.m. Eastern Time, I open up my live trade room, and in the trade room, what do? We look at volume and what? And ATR. Those are the clues that we use. Higher volume, higher ATR, coming into the U.S. session overnight, we know to be looking for range-bound markets. Okay, don't say I didn't warn you. We're seeing a definite consistency with this. Looking at the rest of this chart, though, we opened higher. We closed lower. The volume, though, here's the big clue. Volume here right now, 102.94. The volume was weighted towards the highs. Hint, hint, hint. Wink, 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 right? Write that down. Volume analysis says weighted towards the highs. So clearly what's happened here is you had to move up overnight. Clearly some profit taking at those highs. We closed right at the prior week high, right at last Wednesday's high. But the volume doesn't lie. 102.94, that's going to be a definite clue going into tomorrow. I'll be very surprised if we don't, by the end of this week, see this price going higher. All right? Now, don't quote me on that because I'm just a lonely old day trader. I can't tell you where this is going 48 hours from now. I got a pretty good idea where it's going tomorrow, but I couldn't tell you where we're going to be Wednesday, Thursday, Friday this week, right? That's why I feel so bad for those big long-term traders right now because the world changes so quickly in these markets. This environment, who the hell knows what Putin's going to say? Who knows what the next development's going to be? And that's why you're getting a lot of the U.S. traders sitting on hands right now, kind of waiting to see what's going to be the next development, right, coming out of Ukraine and Russia. I don't want to make a prediction right now, but here's what I would think is going to be the case here as we go forward in the week here. I would assume that this channel is going to be our biggest clue. Now, look what you see here. I see a symmetrical extension up to 104. Now, I don't want to go spook everybody about 104, right, $104 per barrel right now, but that is definitely a technical clue. If you combine in the Ukraine and the driving season, all that bullish fundamentals, along with technicals, we have a complete AB equals CD extension up to 104. So I hate to say this, but I am expecting this price to go higher here still. There's no reason not to right now. I can't think of a single reason not to think this price goes higher, except for one thing. Here's one thing. And that is today's range. Only 60 ticks, right? Only 60 ticks from top to bottom. That means tomorrow is likely to be a very wide range. Here's what I expect to have happen. We gapped up over the weekend. That gap needs to be filled. It will be filled most likely tomorrow if you ask for my opinion. Maybe I'm wrong, but I expect price to push lower, tag the low of this channel, and then go to 104. Maybe not in one straight shot, but I think we're going to find some significant support here. We may go as low as 102.01, right? That's the prior week close. Couldn't you see them filling that huge gap? Easily. I could easily see some profit taking here at the highs, right? The big money say, now you see us, now you don't. It would be a great opportunity for the large buyers on this. I'm talking about the hedge fund managers, the pension fund managers, all the big boys and girls, the elephants. They can't buy right here. They can't buy these highs. The only way they can buy is if this thing pulls back a little bit. And it would make all the sense in the world to get us back to that low of the channel, bring it back into the range, test the prior week close, fill the gap, and then whoop, oopsie doopsie, there we go to 104. All right, so no guarantees, obviously, right? Tomorrow I have to come in just like you guys do. I put my pants on one foot. I can't even say that. That is way too bad of an analogy. But you get the point, right? I'm just like you. I can't predict. I'm going to go out and I'm going to watch and see what the personality looks like tomorrow. But this is what I'm thinking is going to be the case here for the rest of the week here. I do see us pushing higher to 104. And unfortunately, I do think we're going to pull back here before we go higher. All right, just my gut telling me that. But again, a gut feeling is not a trading strategy. Tomorrow morning, I'm going to come into my trade room. I'm going to find the long-term trend. I'm going to trade in the direction of that trend. And I'm going to buy pullbacks and new higher highs. I'm looking for reversals as we push lower. The same thing we always do. All right, there's your crude. A little bit of a lengthy discussion there on crude because the next stuff here is going to be a little bit disappointing. Here on gold. Oh, man. Now the record skips. Wah, wah, wah. Right, here's gold. Is this the same chart from last week? Yeah, it pretty much is. If I zoom out here, you can see we have been inside this darn range here. Now, I said this last week, and I really hope that this wasn't a preview of things to come. We have a very, very important, and now the ECB is throwing fuel onto this fire. Last week I said, I hope we're not waiting for the ECB's June meeting. Oh, please tell me, somebody, please tell me there's something else out there for these gold traders to do something with besides waiting on Draghi and the rest of the crew there in the ECB. There's a big important meeting coming up in June. Everybody seems to be obsessing about this right now. This is the one part about day trading I really don't enjoy, and that is when we get some news on the horizon and nobody will get off the pot and you know what, right? Everybody's waiting on gold. I understand why. There's a big, big problem right now with the ECB with deflation. They don't really know what to do with their debt. It's a big, big problem they've got right now, and that's really, over the last few months, we had Mother Nature got back on track. We had this issue out of Ukraine, the slowdown in China, but the ECB hit the wall about 2 weeks ago. And so now it seems that everybody's obsessing about this right now. You've got currencies going flat. You've got gold going flat. Okay, now that I get my rant out of the way, a real trader says, heck with what's going on right now. I can't change it. I can't change the game. I'm going to game the game. So what are we going to do? We're going to buy lows and we're going to sell highs. If these gold traders want to waste time by just fiddle-fuddling around here in the middle, perfectly fine by me. Mama says, don't touch the middle. Mama says, you know Mama, right? She's always right. Mama says, pay close attention to buying these lows, pay close attention to selling these highs, and don't go anywhere near, right, this cluster in the middle. So that's my plan. And that's what I'm going to recommend you do the same thing too. You'll notice here, got a pretty decent range today, but it's just, it's up and down all over the place. Anything in the middle here is pretty much a waste of time right now. I'm going to wait for price to go lower so I can buy those lows. I'm going to wait for price to go higher so I can fade those breakouts. I can look for fake out breakouts. Everything else on this gold chart is pretty much a waste of time right now. I am going to be focused closely here on the prior week high, 092. I'm watching closely here at the prior week low, 87.7. And then there's my 2-week low at 84.7. You can zoom out a little bit further and you can see there's that 2-week low. All right? Everything else in between is a waste of time right now. All right? Buy those lows, sell those highs, and be careful out there because it's definitely clear that we are waiting on something. I don't know exactly what it is, but I can take a few easy guesses, and it's coming in the month of June. All right? Now, between now and June, you know what the plan is. Buy lows and sell highs until that stops working. And if you go back in time and look at last week's calls, we made a killing last week doing exactly that on gold. Moving now from that funny yellow metal down to one of our favorite markets right now, which is the E-mini Russell. All right? Or as we call in the trade room, good old Rusty. Now, Rusty has been a very exciting E-mini since we began the year 2014. But this is beginning to look a little bit like the old gold, isn't it? Look at the range we see here. I got a high of the range up here at 35.1, low of the range, 78.7. Okay, pretty big, significant range there. You'll notice we do not have to look backwards very far to see that high or that low. So it's easy to find the highs and lows of that range. Just like gold, this is exactly what we're going to be gunning for. I'll be watching closely here at the prior week high. I'll be watching closely at the prior week low. Now, what was very interesting today was look what happened. We opened up at the high of Friday. Okay, nothing really surprising about that. But then we went straight line here, right at the opening bell, right to the prior week open. Now, if you're a member of mine, you're gonna probably finish my sentence for me because you already know what I'm gonna say right now. In my opinion, what do dotted lines tell me? Balance. Prior week open. Now think about what that's telling us. The prior week open. If we are at the prior week open, heck, guys, look at this. We close the session right on top of the prior week open. All the volume on top of the prior week open. The prior week open, heck, it's right in the middle of this range. What am I missing here? We're balanced. Now, why would we be balanced right now? Well, remember, just a few weeks ago, we had that new all-time high. You got to go back a while to find that one. After that all-time high, we then pushed all the way down to this 1078.7. I gave you guys that number as a buy last week. I actually gave you the 84 area for a buy, but you get the point, right? It goes to the 84, whoops-a-daisy, and now right back up again. What's happening is you've got some big money buyers down here. Can't tell you who, but what they're doing is they're protecting. It's basically the 200 moving average off the daily chart is what it is. It's the 200 exponential moving average on the daily chart. It's right around here. Now, we've been talking about this for weeks now in the trade room. Every time we get down around that area, it's almost like taking candy from babies, which, by the way, I do not endorse. All right, do not take that candy from the kids, okay? But it's just as easy. If I was going to be taking candy from babies, it would be just as easy because you can see here, we come down, we bounce right back up. I'm full of bad trading jokes this morning. Candy from babies? Come on now, JJ. So here we go. So we see some protection down at these lows. The highs are clearly being our next target, right? So they come down, they protect the low, right? Again, come in tomorrow in the trade room. I'll walk you through it all. We see this whoop, 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 right back at the middle. And now, let's look at those technical clues that we got. We did get a wide range today. This wide range tells me, be on the lookout for a narrower range tomorrow. So if we get stuck in the mud around this middle tomorrow, you're going to know why, right? So there'll be no questions tomorrow about, Joe, why was the Russell so sloppy today? It'll be because we had a wide range on Monday. Wide range today, narrow range tomorrow. Narrow range tomorrow, wide range the following day, right? We'll play back and forth like that. But look, opening print at the highs, closing print at the highs, volume at the highs, 2-day is higher. So we are clearly short-term bullish right now. There's absolutely no reason to think anything else. So I'm looking for buying opportunities right now on the Russell, and I'm watching this prior week high, 1136.1, like a hawk. All right? That's our target here for the short term. If I'm wrong, if we do happen to collapse, I'm watching closely here at the prior week close and the prior week low. All right? Again, I wouldn't be surprised, though, if tomorrow early in the session we get stuck in the mud somewhere around this 1113 area. Just because we know that's a big move today, we're in the middle of the range, and we have no major news tomorrow. I'm hoping we get some sort of fireworks early in the session tomorrow to get this thing moving, but I'm not expecting a lot tomorrow. But again, like I said earlier, I'm going to come in just like you will. I'm going to look at the price action. I'm going to look at the trend, see the personality tomorrow, and make an educated decision when we get into our trade room tomorrow morning. So come out and see me tomorrow, and we'll sort through what happens between tonight and tomorrow to see if we'll be looking for buying opportunities. So that's what happened today. Russell pushing higher, but right in the middle. Gold, smack dab in the middle. And crude, I don't see any reason why crude couldn't go to 104 here by Memorial Day weekend. Now, let's get ready for tomorrow. Speaking of which, Memorial Day weekend is right around the corner. I'll tell you, this is one of those holidays that just sneaks right up on you. Memorial Day weekend, don't forget, is the unofficial start of the summertime. Now, don't go freaking out on me. We don't have to worry about summer price action until when? The last few weeks of August and the first week of September. Write that down. I don't want to hear any of this talk the rest of this month. Is this the summertime doldrums? No, it's not. All right? It's not going to be until the end of August, the early of September. All right, guys? In fact, the last few summers have been better than the last few winters. Funny how that's worked out. All right, so we know Memorial Day weekend is a hop, skip, and a jump away. We also know that we had no major news today. We have no major news in the U.S. tomorrow. It doesn't mean, though, that we won't wake up tomorrow morning in the U.S. and see some great opportunities that came out of some sort of commentary out of Russia, right? Some more issues out of the ECB. So we will definitely be keeping our eyes and ears open tomorrow morning to see what happened. And remember, I have a really simple trick for trading the U.S. session. It's the volume and the ATR. I don't need to know what happened in the London session. All I need to know is what's my average volume, my average ATR, and what are we trading at 8 a.m. tomorrow. If you're a member of mine, you know exactly what I'm talking about. Just come out and see me tomorrow. We'll talk more about it. So no major news tomorrow. Then, of course, we got the FOMC meeting minutes, jobless claims, existing home sales, new home sales. As you can see here, we get a lot of Red Star news later in the week. Now, we did a real good pep talk, kind of a prep here this morning in our trade room. And we talked about how, with no major news on Monday and Tuesday, we needed to stay selective. So I'll say the same thing to everybody tonight. Be picky about this. Be selective about the trades you take tomorrow. And don't be surprised if the beginning of the session is a little bit sluggish, again, because we have no major news. All right? I'm going to help you guys navigate through this in real time tomorrow morning. So come out and see me tomorrow morning. Let's get ready for tomorrow. Yikes! What is going on with this? Why would you bring this chart up here? I know, it's ugly. This is the anchor chart on gold right now. Can anybody guess what I'm going to do with this thing? Absolutely. Buying lows, selling highs, buying lows, selling highs. In fact, these levels are still here from last week. I gave you guys the buy at 1290, the buy at 1287. I gave you guys the sell at 1304, 1306. I gave you guys a sell at 1309 last week. This is how we made our money last week on gold. Price goes lower, I'm buying at support. Price goes higher, I'm selling at resistance. Now, as you can see here, there is no shortage of opportunities here. As you can see, we got 1287, we got 1284, we got 1277, 1273. So use those levels below you for buying opportunities on gold. And then take your profit at the opposite side. So if I buy this 1284.6, I'm going to take my profit up at the 1304.6. So sell the high, take your profit at the low. Buy the low, take your profit at the high. All right? I know I sound like a broken record, but I want to make sure you guys are aware of this. Selling opportunities overhead. Buying opportunities down below. This type of market personality is telling us, don't you dare go near those middles. Those middles are going to be dangerous stuff there. Buy those lows, sell those highs. Now you know the plan for the funny yellow metal we call gold futures. Moving forward here, now from the gold over to the mighty Russell. Now the Russell had a nice strong move here this morning, but you can see it's still got some work to be done. By the time we got to this bad boy in the U.S., we had already pushed higher here. So now we've got the pullback we need here, and now we're locked and loaded to go higher again. Ideally, the ideal scenario is, members, you probably already know this one, I would love to buy right there. That would be the ideal. Pull back to that trend line. You can see that nice, easy trend line. Get a pullback here. You get the moving average cloud right below you. It's just a delicious little area there to be a buyer. I hope we get a chance to buy that. If we don't, every new higher high that I make, I'm looking to be a buyer here. The only problem I have is the 1117 overhead. I will not be able to buy directly into the 17 even area on the Russell overhead. All right, this is the symmetrical buyer's target. Members, don't forget to ask me for more clarification on that tomorrow morning, more help. But 17 is a symmetrical extension. We know there's going to be a buyer's target up there, so I'm not going to be buying directly into it. If this thing goes to 1117, it's okay. Wait for a pullback. Once it pulls back and goes again, then I'm off to the races, buying it one more time. So we are bullish here on Russell. I have targets overhead at 17. 23s and 28s, and then 35s. Later in the week, I hope it's not later in the week too much. I would love to see it go straight up here because we'd be able to grab some buying opportunities there. But later in the week, we'll then look for selling at those highs. So I'm looking for buying opportunities right now. It would be much better if I could get this price to pull back a little bit before it goes higher, right? But that's okay if it doesn't. As soon as I get that new higher high, as long as I'm not trading directly into 17s, I'll be just fine continuing to be bullish. Got to take some profit off, though, up around this 23 to 28 area, and then we will be looking for a stumble here and a short later on tomorrow or later on in the week. So now you know your opportunities from the Russell. Buying on pullbacks, buying at a discount. I don't want to buy the highs. I don't want to trade into resistance. So use the levels overhead as your targets here as we go into tomorrow. And then last but not least, it took me a while to think about how to deliver this chart tonight on crude. As you can see here, this is not really the way that I like to trade. There's way too many options here for us. But the problem is I know we're bullish. And so I'm not going to skimp to make it simpler. I'm not going to discount the legitimacy of this analysis just because I feel like there's too much on this chart. One thing I can see, though, is we know we're bullish. We talked about Ukraine. We talked about the summer driving season. We talked about the fundamentals and the technicals, both giving us clues for buying opportunities on crude right now. Now I have to find the entry. I know we're going higher, but now I got to find the entry. And guys, here's going to be the most difficult part. The most difficult part is we have literally a buying opportunity every inch as this thing pulls back. So if we blow through one, don't worry about it. Wait for the next one. If we blow through the next one, don't worry about it, right? Wait for the next one, and so on and so forth. Remember, guys, on these newsletters, I'm not giving you short-term trading time frames. These are longer-term time frames because the shelf life of a scalping time frame, by the time you use it tomorrow, it'll be worthless to you. So the goal is these levels are going to be useful throughout the day tomorrow. So I'm going to be looking for buying opportunities at 102.18, 101.66, 101.40, and 192 pretty much for the rest of this week here unless we make a new higher high here. So as price pulls back, I'm looking to be a buyer. This is where it gets a little bit tough, though, because you can see here we got quite a bit overhead, too. We got the 102.92 to 103.45. By the way, folks, that 102.92 was my buyer's target from last Thursday's newsletter. Don't take my word for it. Go back and see for yourself. Last Thursday, that number's been there for a week now. So we've known about that target for a long time. So don't say I didn't give you guys a heads up on that a week in advance. So we already knew that we had some targets up top here at 102.92. That will continue to be my target. Then, of course, we got 104.06, 103.85, 104.22, and then 105. So we talked about the fact that we had a projection to get us up to that 104, right? Remember that VIP chart? We can easily see 104 in the cards here, boys and girls. And so it looks like all we have to do right now is find ourselves pulling back into any of these support zones and start getting long at any of these levels here tomorrow, right? Or overnight. So you know my plan, right? My plan is to buy crude. My plan is not to buy these highs. My plan is to buy on a pullback, buy at a discount. And I want to do that either tonight or tomorrow morning. So fundamentals tell us we're going long. Technicals tell us we're bullish as well. Now all we got to do is use any of these buy zones here to properly enter our positions so we're not buying at a premium. We're buying at a discount. All right? I don't want to be buying at resistance, so I'm waiting for price to pull back so I can buy at support. All right, guys, that wraps up here today for our nightly newsletter. That does it for crude. Now, I want to remind you guys, don't forget to download today's charts, sign up for our free pass and our nightly newsletter. And guys, I want to thank you all so much for being a part of this newsletter today. My wife Megan and I created SchoolOfTrade.com over 10 years. That's right. We've been teaching traders for over 10 years now. I challenge you to find a better place to earn and learn on the web. We've been doing this right for our students for many, many years, and I'm excited to welcome you and anybody else to attend our free trial and learn more about our 3 levels of membership. We provide every single resource that our students need, and I look forward to welcoming you and others, among others, into our live trade room tomorrow morning as a brand new student. Signing off now from our corporate headquarters here in Los Angeles, California. We get a short week ahead of us, guys. Have a great evening. We'll see you tomorrow morning in the trade room at 8 o'clock, and tomorrow afternoon back here once again for another copy of our nightly newsletter for Tuesday. Signing off now, boys and girls. Adios, amigos. Bye-bye for now.